So it's June 26th, and I'm about to cross $12,000 in payouts. And just a little bit about me. I've been day trading for 3 years, and I recently just started posting a lot more on X and my Instagram. But the truth is, like, it took me 3 years to get to this point of trading because realistically, I didn't make it all in one day. And on my Instagram, it really does feel like I all of a sudden just started getting paid hella from trading, but no one really saw all the nights that I spent backtesting or reviewing or almost wanting to quit because my strategy was fucking shit, or I'd spent like a year trying to become a profitable trader. I had no results to show because the truth is, I had zero payouts, zero withdrawals. Like every time I put money in my personal account, I pretty much lose it all. I kept on buying shitty ass courses. Like there was genuinely nothing. There was no reason, no logic for me to continue. Like all the data was telling me you just gotta stop, quit, and cut your fucking losses. But trading was the one thing that I knew if I do not give up, there it, there's just a possibility that I make it, right? Because I surrounded myself with so many people that trade for a living, and I thought it would be ridiculous if I was surrounding myself with these people, and I thought it was logical to give up on my dream because trading really did unlock a whole different like opportunity for me when it comes to creating my own personal brand, working for myself, getting that financial freedom. Like there's all this stuff about trading that I just loved, except I could never get close to it until now. My first payout was during halfway through May. You guys can see all the receipts soon after I actually boom, like look, they're all right there. But again, it's like I worked so fucking hard for this, and now everyone's just seeing the results. Like I only started posting when I had the feeling that I was about to make it, right? My first YouTube video was 7 months ago, and look, here, I'm gonna move my camera for a bit. Look at my first video. It was just me trying to pass some combines, get some funded accounts, and then yeah, I got some funded accounts, but it took me fucking 7 months to take any money after I got it, right? And then slowly, oh wait, hold on. Slowly I started like withdrawing money. I started learning. I started like working harder because I was so close to getting that breakthrough, and eventually I did get that breakthrough, and that's what helped me that's what helped gave me the push to continue, and now I'm kind of just using this momentum. And but yeah, anyways, I just wanted to give you guys a brief little background about me before I hop right into the video, right? Because now I'm gonna share the strategy that helped me realize that trading is possible, right? And there's gonna be a multi-part series. There's gonna be a lot of hopefully a lot more lessons. My YouTube video production is pretty slow because sometimes I just get super fucking lazy when it comes to creating content. But this should be a good starting point. And obviously, this video alone will not make you profitable. Okay, I'm just gonna put that out there. Even after I discovered the supply and demand trading strategy, it still took me like another year of studying before I could truly understand what was up about the strategy. And I had a lot of learning, right? And yeah, I can't sum it all up in like a 10-minute video. And I'm probably gonna post it to IG too, so cut into reels. But anyways, point being is that this is gonna take time. If someone is gonna tell you that they have the holy grail strategy that will instantly get you profits and results, it just won't fucking happen, all right? But I guarantee you, maybe not this video, it won't change your mind because to be fair, it's just candlestick patterns. But after I dig into the actual theory of how to trade or why this trading strategy works, you guys are gonna be really fucking impressed. And I've done little write-ups on my Instagram or my X, but yeah, I'll definitely go more in depth in this YouTube video series. So anyways, let's get started. Okay. All right. So yeah, here's the first video in the series, the supply and demand strategy, how to identify zones. All right, this is very simple. I'm not gonna go over the hundreds of fucking nuances that I've discovered just trading the strategy. That is gonna be a whole separate video. This is just gonna be how to find them on the chart. It's not you're gonna and for some context, like about 80% of these zones fail. All right, you shouldn't expect all of them to work. It really is about how you read them, the context of the markets, and just a whole like multitude of factors. But this will teach you how to spot them on your charts. But the problem is when you do start trading these, when you do start trading the strategy, this is a single strategy. All right, you cannot start mixing other strategies in. You cannot start mixing, like I tried mixing in auction market theory. I tried mixing in order flow. I tried mixing in like other indicators. That shit just does not work. All right, you have to use the strategy by itself. Okay. Anyways, so there's 3 different types of candles in these zones, in the zone formation, right? There's a rally candle, which is pretty much just a bullish candle that has a large body, if you see right here, and a drop candle, which is just a large red candle, right, where the body is larger than the wicks. Okay, these are going to be the start of your zones, and then the next candle that you gotta this is like low-key. It's been a while since I've done long-form content, so it's kind of hard for me to teach, but hopefully I get better as time goes on. The next candle that you gotta learn is the basic candle, right? These can come in groups of 1 up to like 5. If you can't have 10 basing candles in a row. If you have 10 basing candles in a row, that is not a real zone. And the theory behind that is that these basing candles, they are the footprint of like those big banks and institutions when they have a huge pile of orders that they don't get filled all the way, right? So the charts leave these huge stack of orders that when price gets retested into these basing formations, that is when it's more probable to be bullish or bearish, right? Because if there's a huge stack of buy orders, then if you are buying alongside these guys, and while there's more buyers versus sellers, obviously buying is going to be higher probability, right? But if time spends too much time, or if price spends too much time basing in the formation, then all those orders get filled, and then now there's no longer this huge stack of papers that give you edge, right? It will just be trading at any other location. So you want to go 1 through 5, 1 through 6 basing candles, and they pretty much look like candles that the wicks dominate more than like 50% of the actual candle, right? They can come in like doji candles, the pin bars, the bearish pin bars. Like, the point is, the wicks make up the majority of the candle, right? Because that implies that price didn't spend much time in that candle at that price. And as a result, there's a higher chance that these stacks of orders were left unfilled, okay? So when you mark out these zones, you want to make sure that you combine all the basing candles together. You don't want to start curve fitting and like leaving out basing candles before you get to the next rally or drop candle. You need to keep the basing candles together. And in this video, I'm going to be talking mainly about the rally candle. The rally-based rallies and the drop-based drops. So the leg out, these are the same as the initial leg in candle. So if we're working with a rally-based rally, right, then you're looking for another big candle that is bullish. A rally candle is bullish, a drop candle is bearish. So the leg out candle, these signal that price really didn't have any time to fill these orders because price imbalanced away from it, right? And the imbalance away from it signals that there is, okay, maybe imbalance isn't the right word. The leg out signals that there actually was a really strong imbalance because price did not have any time to fill these orders, right? So with the leg out candle being explosive candle, it leaves behind this footprint of orders, right? Look, so it goes. This is how you read it. So rally, base, rally, and then you get the leg outs. And if the leg outs can be a bit subjective, but they're also objective at the same time, because the larger the leg out candle is, the bigger the here I'll draw it out. The bigger the imbalance is. So, fuck. Let me get paint. Okay, so watch. The reason why I said the leg out candle amount is subjective is because there can be 3 candles, right? There could literally be 3 candles like that, or there could just be one big candle. So with that being said, does that really change that there's a chance that these stacks of orders, the stack of buy orders, are not there anymore, right? Because this leg out proves that these orders didn't get filled. So you can do either 1 leg out, or 2 leg out, or 3 leg out. Like, it is very subjective, or it's up to you. When you understand the theory more, I shouldn't say subjective. What I'm really trying to say is that you can bend the rules a bit. If you always want to mark your zones with 2 leg out candles or 3 leg out candles, then that is your rule. But if for some reason there's like 1 big candle but no leg out candles that break the previous high, then that means that's how you identify your zones. But if you want to make that exception for the zone, because this zone, like, context really matters here. And this is just one of the nuances, and I really shouldn't be getting into the nuances, because that's what's confusing the fuck out of me too, because I'm trying to keep this simple. But point being is the explosiveness of the next few candles determine how strong the zone is, right? And in this example here, I'm saying that the leg out candles, they have to break the previous high, because the previous high the previous high being broken indicate that price is really moving away, and it just shows a very strong imbalance. And the market structure of the swing highs being broken show that price is trending away from the zone, and that means that because there are so many buyers at this zone, there's not enough how do I phrase this? Because price is trending away from the zone that strongly, it shows that these buyers here, these limit orders, never got filled, because these orders that I'm talking about, they're all limit orders. But if price shoots away from it, there's no time for these orders to get filled. But if price does something like this at the zone, then yeah, obviously the stack of papers are going to look like this. Well, meanwhile, if price does something like this where it shoots up, there's a huge stack of orders left, right? And these are all buy orders. Like, these are buy orders. I don't know if I did a good example. I don't know if I did a good job explaining that. But anyways, the main practice is when we actually go into the charts. So yeah, these are the simplest forms of supply and demand. There's also the drop-based rally and the rally-based drop. But for now, we're just going to focus on these two, because these are like the OG zones. So yeah, they're just rally candle, and then a base, and a rally, and then the candles that follow afterwards, they have to break each other's high. And the basing zone should also be untouched, because if the basing zones are untouched, then that means the orders are still there. And I forgot to mention, fuck, I completely forgot to type this out. Okay, so we're gonna have to paint it again. So in a demand zone, there's gonna be a rally. Okay, let's say this is a base. Okay, and then a rally, and 2 leg out candles. Okay, this is a very strong move. And you can find these zones easily by just finding like where the big impulsive moves are. But anyways, we're gonna actually figure out how to draw the zones. Now we figured out how to identify the zones, but now we gotta draw it. So in a demand zone, you take the highest body of the basing candles. So you would draw it like this. Ignore the wick. For the top part, and the top part is called the proximal, and then the bottom part is called the distal. I just think distal is like the distance, the line that is distant away from it, and then the proximal is the line that is the closest to where price is. Because since this is a demand zone, you should expect that price is gonna approach it like this. So the proximal line is the closest line, and the distal is the farthest line. Distance. All right, that's how I remember it. And then in a supply zone, you think the exact opposite. So essentially, you fucking copy this, paste it over, flip this over. Oh, okay. That's fucking dumb. Okay, now I can't delete it. Okay, boom. Okay, price is going down. This is a basing candle, right? Okay. And the way you want to mark this is this would be the proximal and this is the distal. So you take the highest of the wicks here for the distal, and then for the proximal. Okay, how the fuck do I make this bigger? There we go. The proximal, you want the thing that's closest. Fuck, dude. Paint is so fucking dog shit. Okay, it'll get better when I draw it. So yeah, the distal, you always want to account for the wicks. Distal, you use the wick. And then for the proximal, use the body. That's the best way to describe it. And then as we actually get practice on the charts, it'll make more sense. So here we go. Alright, so the way you want to read this is from right to left. So I have an indicator that highlights all the basing candles. It's pretty easy to code. Just go in ChatGPT and say, code me an indicator that highlights the candles that are more than like 50% wiki, something like that. But anyways, here we go. So when I see a strong move like this to the downside, I should expect that not all the sell orders got filled here. So if I zoom in, I can see this basing candle. So you want to check out the sequence: drop, base, drop, drop, drop. So after this first drop here, it actually becomes a leg out. But for like, it doesn't have to be a bearish candle. It just has to break the previous low, and it has to be a strong move away, right? Some people do no leg outs, some people do a lot. But again, when you see a strong move like this, you should expect this zone to work. So we highlight it. The distal takes the highest wick, and usually the wicks don't go past the basing candles, but in this example it does. So we account for the wick here, and then you want to ignore the wick for the proximal, so you use the body, right there. Actually, hold on. Fuck it. Okay, so then keep on going. Okay, we found another demand zone right here. So you see this move up, big move up, big move away. You want to count. Yeah, I mean, my eye looks at the direction or the um how big the move is, and then I look for the basing candle in that leg, right? So we look at the basing candle, and then to draw a demand zone, take the body for the proximal and the wick for the distal. Boom. And then demand zone, right? And you already see it works. Right here, gets filled. There are more buyers than sellers at this location. If you're buying anywhere in the zone, you are you have edge here, and that's why trading can become a profitable career. All right, continue. In this leg, you see absolutely zero supply zones, and that's why price, after it fills this 4-hour demand zone, it just almost breaks this high, but it pretty much covered this entire leg, right? Okay, over here, we see another demand zone, strong move outwards. You go rally, base, rally, and then leg out. There's only one leg out, so this zone isn't that great, but yeah, that's why I ended up failing. And well, actually, there's definitely a lot more to why it failed, but yeah, this is a zone right here. This is another zone that would have worked. Okay, I just realized I'm on the 4-hour chart, so let me change that real quick. Same here, rally, base, and then the gap up. I just count this as one big move out, and then look, you zoom in to the highs here. Highs broke, highs broke. It gets broken like what, 5 times? That is a really strong zone. Extend it. Boom, right? Of course, that zone works because the move out was so strong. Again, plenty of buy orders here. When price comes back, fills them, and then price goes up because there are more buyers than sellers. Nothing. And then here's like the zone that I was talking about, the rally base drop, but we're not covering that in this episode or in this video. Holy shit, episode. What am I, fucking Netflix producer? Okay, this is another one right here. The zone didn't work. And again, if you guys remember what I said about zones not working, a majority of zones do not work without the right amount of context. So this goes drop, base drop, and then leg out, leg out. You get 2 leg outs. Breaks the low of both. One right there, one right there. And then this right here is also technically a zone because it goes drop, base, drop, drop, and then the low, like the low gets broken twice here. So there is like a bearish trending move down here. What about this? Yep, this is the same thing. Drop, base, drop, and then this counts as a leg out because it broke the previous low. It can also look like a basing candle. Basing candles that are leg outs can be identified as leg outs. They are not basing candles in this zone. So you don't have to do, actually, or you can combine them. I forgot to mention, you can literally combine them too, because this is actually a level on level, which again, more nuances that a simple, we're already like 23 minutes in, and I already feel like I've gone off tangent like 20 fucking times. But okay, this one. Okay, I forgot to mention. Look, this one, it wouldn't be a demand zone because the leg in is covered by the base. If the leg in is covered by the base, then that means orders got filled here. That means there's not actually a rally base rally. Yeah, sure, this candle is very deceiving because it looks like the body is larger than the wicks, which is true, but because this would be your zone, if there's a candle that is living inside this basing candle, then that means price had time to fill out all these orders. So why would there be a demand imbalance here? And I'll say, as a rule, I would say you need at least one leg out. So this goes rally, but this leg out doesn't break the previous high, so you wouldn't count that. And because price has been so bullish in this these past few days or these past few months, it's pretty hard to find any good supply zones. This one, there's an equal high, and then maybe the third candle after that, we instantly retest it. So I wouldn't count this as a demand zone personally. Yeah, I would like, even though it looks like it worked, I wouldn't count this as a demand zone according to my rules, because if this leg was like stronger, yeah, this leg was stronger and the second candle succeeding it wasn't a bearish candle, um, I would think it's a lot more high probability, but I chose not to mark that one. This one, there's only one leg out. So if you decide to only do one leg out, then yes, this counts as a zone. But if you choose to do 2 or 3, this does not count. This is a supply zone, drop, base, drop, then leg out, leg out. Both these 2 candles break the previous low. Alright, I'm going to do one more zone here. Like this zone worked right here. Huge move up. Ignore the wick. And I guess if it isn't obvious yet, when there's multiple basing candles, you still want to take the high of the body in the formation, right? I feel like most of the zones have been just one basing candle, but since this one has 2, you don't want to mark it like this. Do not mark it like this, because now you're ignoring this basing candle. Basing candles stay together. You take the high of the bodies for the proximal, and the low of the low of the wicks for the distal. Like if there is a candle that, if like let's say the wick right here was like this, you'd want to take that wick. Boom. That's where you would have your distal. Alright, so I think that should be enough examples. If this ended up being very confusing, I am going to I'm going to do follow-up videos, and I'm going to get better at describing my process. But yeah, I feel like this time I was low-key just hella nervous. And yeah, I mean, hopefully this is like enough. But yeah, you can do this on every time frame. Some time frames work better than others on different instruments. I trade the NASDAQ, so I have a few time frames that I work with. But I mean, yeah, that's it. I'm going to post this video, and I guess let's see how it goes.